let's talk about what the construct of the market looking like. We have Akshay Bhagwat as well as Nagaraj Shetti joining us this afternoon. Good afternoon, Akshay. Good afternoon, Nagaraj. Thank you so much for joining us. And Akshay, let me come to you. What exactly is happening in the market? The volatility definitely is seen a sharp spike. If you look at the benchmark indices, third day of decline coming in. What are the charts indicating?
Good afternoon. So, well, the Nifty has been in a range for the last 10 to 15 trading sessions. The clarity which emerges is that 24,450 basis Nifty spot is an important short-term support zone. Now, if you look at the data points, the FIIs have been sellers in index futures since the last 5 trading sessions. So that's initially giving out signals that this support may not last for long. 24,450, if it breaches, we are heading for levels of 24,100. So the broader setup still is neutral, but the sell trigger comes once we break below the levels of 24,450 basis spot Nifty.
Right. Nagaraj, what's your take coming in, especially when you talk over the broader markets, because they've been trying to show some sort of resilience. Today you have the small cap index that's still holding on to the positive territory. No doubt you've seen the mid cap actually join the scores of the benchmark as well as Nifty Bank. What's your take? Do you think broader markets will continue to show that resilience going ahead as well?
I think mid cap and small cap are very strong. Market breadth is not that damaged compared to benchmark movement, and the broader markets are doing recently well. We have seen some consolidation movement at the higher levels, but trend remains up for the mid cap and small cap. We have seen most of the stocks outperforming in this week benchmark market, and I think more upside is likely in the broader markets, especially for mid and small cap segments are still looking attractive, though they are placed at the higher levels. Still, there is no signs of any tiredness or any reversal pattern building up in the mid and small cap segments at the higher levels.
Okay, let's talk stocks as well and tell you what the texture of the market is. It's really been banks. Yes, rather you could single out a Yes Bank, which is of course a different case in point altogether. That stock is down about 9.5%. But the fact that Nifty Bank managed to scale its all-time peak today and did clock in a fresh all-time high for itself of 56,161. Akshay, do you sense that sectorally the leadership from banks is going to continue? And again, one is seeing a very distinct flavor. It's largely ICICI Bank and HDFC Bank which continue to remain leaders and continue to clock in, further strength.
Well, if you look at Bank Nifty per se, it is tested the all-time high levels today, almost near the 56,100 odd mark, which we saw a few trading sessions back. So yes, ahead of the bank policy, which is due this week, there is likely to be some choppiness, some profit booking, because largely entire May series has been range bound for the bank index. Now, if you see the stock specific action, really it is the PSUs coming to save the days. It is private banks, bank likes to the HDFC Bank or Axis or ICICI, who have been kind of saving the bank Nifty, but eventually I believe that the level of 56,100 has to be broken for the index to further pick up momentum, because right now from a trading perspective we are at a resistance zone, and even a slight jerk from here can see the bank Nifty again revisiting the lower end of the trading band till 54,500. So slight caution if you are trying to time the trades on the buy side. It will derive more comfort if we manage to break past the 56,100 for a fresh buying entry in the bank Nifty.
Right, okay. Let's try and analyze what the market texture has been, and it's been sure a roller coaster of a year since Prime Minister Modi took charge for the third time. And even though the narrative has been that FIIs favor the current administration, they remained largely on the edge, with our benchmarks notching just about single-digit gains since less than enthusiastic verdict last year coming in from the elections. But Sharad is here to try and dissect how the market trend has been so far.
It's been 1 year since the results of the Lok Sabha election has come in. This is the third time for PM Narendra Modi coming out. But let's see how the overall markets have actually fared. And Sensex is up 6%, Nifty almost 6%. Mid cap, small cap, they have done well, largely mid cap. Interestingly, Dow Jones, that has done well, almost 10% up if you compare it overall. Also, there are other indices, also global indices, which you'd like to point out. DAX, NASDAQ, That is where the momentum has been very strong, and markets, if you look at it segment wise, IT segment has performed really well. On the losing end, auto segment, metal, PSE, they're falling between 3 to 12 odd %, and of course banking and FMCG names still holding up. Mid cap, small cap indices also doing pretty well. Of course, the Nifty gainers, if you look at it, HDFC Life, Zomato, Bharti Airtel, and do remember Zomato has recently entered in the Nifty index, but still, nevertheless, a strong momentum happening in the stock. Top losers, IndusInd Bank, Adani Enterprise and Tata Motors is something which you would be looking out for in Modi 3.0. Also making it to the list is Bajaj Finance and Shriram Finance. That's the top 5 gainers coming in, and Coal India and Asian Paints also making it to this list. So this is the overall performance segment wise, Nifty stocks and global stocks when it comes to Modi 3.0.
All right, thank you so much for that, Sharad. Interesting one coming in when you talk about how the markets have fared over the last 1 year. But on that note, we slip into a break on this edition of Closing Trades.
If you like this video, then like, share and subscribe to ET Now.